Hello everyone, my name is Minakata from KIRIN Holdings. Thank you for having interest in the KIRIN Group's health science strategy. At this event, I will begin with an update on KIRIN's health science strategy and the future growth of Blackmores, which completed the acquisition process last month. Last year, the CEO of Blackmores will then provide an overview of the company and its growth strategy. We hope that you will further deepen your understanding of KIRIN's health science strategy and Blackmores. We would also like to make this great opportunity to utilize your valuable insights in our future management. Since its founding, the KIRIN Group has consistently focused on fermentation and biotechnology as its core, and has evolved into a corporate group that is unique in the world, with strengths not only in the alcoholic beverage and soft drink business, but also in the pharmaceutical business. With this strength in fermentation and biotechnology as a backdrop, we are working on the health science business starting in 2019 with materials such as LC plasma, which have high evidence. In the health science business, we aim to build a unique business model to reach a wide range of people around the world and contribute to solving health issues through our B2C business as a brand business, in addition to developing and deploying functional materials by utilizing KIRIN's core R&D technologies, which is one of our strengths. In Japan, we have realized significant growth in LC plasma business since 2019 by leveraging the brand business assets developed by the group. Our business is steadily expanding, including our collaboration with Fanco. On the other hand, the lack of solid footprint overseas has been a challenge for KIRIN, but with the addition of Blackmore starting in 2023, we will be much closer to the business model we are aiming for. To build a B2C business foundation in health sciences, it is necessary to have a strong brand and sales channel in the area where we operate, as well as intelligence in complying with regulations in that area. In Japan, KIRIN's business base is being established with Fanco, and in Asia Pacific, Blackmores already has a strong business base. Therefore, we will first focus on these two areas to concentrate the group's management resources. At the same time, for further business expansion in the future, we will continue to search for new opportunities in the North America and other regions where the market is large and where KIRIN operates its business in the existing business domains. As an upstream of the value chain, we will develop and manufacture materials by utilizing our R&D capabilities, which are the source of KIRIN Group's competitiveness. In addition to expanding the pipeline through the development of high value-added unique materials, we will increase the added value of the materials themselves by developing new functions, such as brain function and skin health, for already existing materials. Our unique approach to our consumers is not only to address their individual health issues, but also to help them enhance innate power of human being. In other words, to contribute to the health of their foundation. In particular, we believe that in addition to diet, exercise, and sleep, daily immune care is important in building a healthy foundation. By executing the development, manufacturing, and sales of materials that leverage KIRIN's strength and building a B2C business foundation with the addition of Blackmores, we aim to realize sales revenue of 200 billion yen and return to profitability as a health science business in the next fiscal year. We are aiming for sales revenue of 120 billion yen without Blackmores in FY 2023. In order to make the health science business the third pillar of the entire group, we would like to make the health science business about 20% of group sales revenue, and our future goal of 500 billion yen in sales revenue and a 15% operating profit margin remains unchanged. In addition, since we have grown in size, we are considering a change in the way we present our financial results disclosure. We believe that this will make it easier for investors to evaluate our performance, which will contribute to the enhancement of our corporate value. Having explained the overall health science strategy above, I will now discuss the further growth of Blackmores. As we indicated in our recent financial results announcement, the KIRIN Group operates mainly in Japan, Asia-Pacific, North America, and other regions. In addition to Japan, which is the base region for our existing business, and North America, which is geopolitically stable and has a steady track record, we consider Asia-Pacific, where future growth is expected, to be an important area. Blackmore's contribution will accelerate the expansion of our business in this region. As a result of in-depth due diligence prior to the acquisition decision, we confirmed that Blackmore's has customer contacts in the Asia-Pacific region in the health science area that the KIRIN Group did not have before, a broad product lineup that enables contributions to foundation health, such as immunization, and a strong brand. The company has confirmed that it has a broad product lineup and strong brands that can contribute to foundational health, such as immunology. Blackmore's is the best entity to complement the capability in realizing KIRIN's health science strategy. As for the brand, we conducted our own consumer research in the countries in which Blackmore's operates and found that the brand is efficacious and high quality in each country. Rather than simply saying that the product is selling because it is recognized by consumers, we confirmed that the product is selling because it is perceived to be effective. Alastair will explain customer understanding in more detail in his presentation that follows. I personally took the time to speak with each and every member of the Blackmore's management team prior to the acquisition decision and was assured that they are a highly professional management team with extensive global experience. From here, I will explain Blackmore's performance. Profitability has temporarily deteriorated due to the acquisition of a plant with a large capacity in Braeside near Melbourne in 2019, and the impact of reduced inbound traffic to Australia associated with the COVID-19. But costs have been declining and profitability is recovering each year through higher utilization rates and efficiency improvements at the new plant. We will continue to improve profitability by utilizing manufacturing capacity through sales growth in each country and improving operations through SCM efficiencies, with the goal of quickly returning EBITDA margin to the pre-2019 level of 15%. Going forward, KIRIN will work together with Blackmore's for further growth and achieve sustainable sales revenue and profit growth. Although we are still in the process of confirming with our audit firm and others regarding their future contribution to our business performance, we plan to start the deemed inclusion in July for the current fiscal year. Although the specific amount has not yet been determined, the amortization of intangible assets is also expected. Although the impact of the full year results will be minimal, it will make a positive contribution to our normalized EPS. In terms of value creation, our first priority is to develop KIRIN materials. Blackmore sees the utilization of materials such as LC plasma, citicoline, and human milk oligosaccharides for the Blackmore's brand as an opportunity, and PMI is progressing well. However, it usually takes several years to launch a product using a new material due to the complicated procedures for obtaining approval, etc., which vary from country to country. KIRIN on its own was expecting to launch in 2026 or later, but by utilizing the knowledge of Blackmore's, KIRIN is currently aiming to launch in 2025 in multiple countries. As an image of the contribution to sales, since Blackmore's new product sales are approximately 400 million yen per SKU, we can expect several billion yen in scale in conjunction with the number of new products in the future. Other areas we are considering include leveraging KIRIN's channels in Asia and developing the Blackmore's brand in Japan. We are also in active discussions with Fanco regarding synergy studies, and although we are not yet in a stage where we can provide details of our collaboration with Fanco due to competition laws, we are considering various possibilities, including the use of technology, brands, and channels. In addition, from the perspective of improving management efficiency, we will promote joint procurement, functional integration, and SCM efficiency concurrently. I would like to reiterate that with the addition of Blackmores, KIRIN's Health Science business has entered a new phase, and I hope that you will look forward to this future. Next, Alastair will give you an overview of Blackmores and its growth strategy. Thank you very much for your attention.
Good morning, everybody. My name is Alastair Symington. I'm the CEO and Managing Director of the Blackmores Group, and it's with great pleasure that I have the opportunity to present to you this morning. During my presentation, I will take you through the following topics. We will provide you with the company overview and market position, what we see as Blackmores' core strengths, an overview of our strategic plan, our FY23 financial results, and then I'll finish the presentation with an update on the integration and the progress we're making as part of our post-merger integration with KIRIN. So firstly, our company position and market overview. As you know, Blackmores is Australia's leading natural health company with unrivaled naturopathic heritage. We're a company that is 90 years old, starting in 1932 in Brisbane in Australia, in a compound pharmacy. And since then, we've established ourselves as the leading natural health brand in Australia with our Blackmores brand. We also have two other brands, Bioceuticals, which is the leading practitioner brand in Australia, with over 1,000 quality health products and services, and a leader in natural health science. The other brand is Pure Animal Wellbeing, or PAW, which is one of our products which is specifically designed to provide pet owners with the best natural health solutions for their animals. We operate in 13 markets, and we have over 1,250 employees. A little bit more about our brands and their respective target categories. They have clearly defined positions within the market in which we play. Firstly, with Blackmores, as I said, we're Australia's #1 natural health brand. We have market-leading position in Australia and Thailand, and we've actually just regained our market-leading position in Malaysia. We're also a top 2 market share in Singapore. Our brand has been the most trusted brand voted by Reader's Digest for the past 15 years, and it's built on the foundation of equity and trust. Bioceuticals is the leading practitioner brand in Australia. It's highly recommended by pharmacists and other healthcare professionals. It is guided by naturopathic principles and validated by scientific evidence. Armourforce, which is a sub-brand of Bioceuticals, is the #1 immunity brand in Australia. And finally, for PAW, as I mentioned, we're the leading natural health supplements business in Australia, and we have the highest awareness of any pet supplements in Australia. Today, it is only a product which is distributed in Australia, but certainly there has been great interest since COVID-19 as pet ownership has skyrocketed and pet owners have become more aware and more willing to substitute their nutritional supplements for their pets. In the last financial year, the Blackmores Group was the second largest incremental retail sales growth in the Australian vitamins and supplements category. And Blackmores brand growth across all of our markets was up 5% in net sales in the last financial year. One of the most attractive positions for Blackmores Group is our geographic footprint. We have a well-balanced portfolio of growth and defensive markets. I'll now spend some time taking you through how that splits out across those markets. So our home market in Australia and New Zealand represents 44% of our FY23 net sales. China is our second largest market and is 28% of our FY23 net sales. The balance of our business is split across what we call the international markets, which is largely Southeast Asia, which is 28% of net sales, with our largest market in Southeast Asia being Thailand, followed by Indonesia. We also have a very strong position in Malaysia. So now to talk a little bit about what we see as our Blackmores core strengths. We've identified 6 key strengths that underpin our brand proposition and sustain our competitive advantage. The first one is education and thought leadership. The second is winning partnerships. The third is innovation. The fourth is consumer understanding. The fifth is regulatory, quality, and safety. And finally, winning in store, both offline and online. I'd now like to take you through 3 of those core strengths in a little bit more detail. The first core Blackmores key strength is innovation. This is a very important core strength, and it's one that we've invested significantly in here at Blackmores because it underpins anticipated business growth. I am pleased to say that in the last 3 years, contribution from innovation as a percentage of our total net sales has increased due to this significant innovation, as well as the execution from our markets. And I'm just going to take a little bit of time to take you through what I see as category defining innovation. So there's really 3 elements here. The first is innovation that stands the test of time. And I'm sharing here 8 examples of products that have been launched over the past 20 or 30 years at Blackmores that are either still number 1 or number 2 in their respective segments, both in terms of Blackmores and bioceuticals. So that is the foundation of innovation. The second is ensuring that you have a robust 3-year pipeline that's expected to drive both sales as well as expanding gross margin. And each of our innovations needs to go to market with gross margin at least at or ahead of the category average gross margin. And I'm pleased to say in the last 2 years, actually, we've gone from 9% contribution from innovation as a percentage of total net sales to an expected 14% in the FY24 year. The third area is ensuring that we have an ongoing innovation pipeline for the future. And I am pleased to say that the team have already started developing the product innovation for the 25 to 27 financial years, which is grounded in consumer insights and understanding. One of our other core strengths is consumer understanding. At Blackmores, our understanding of consumers and practitioners is a core strength, and it's underpinned by 6 key sources of consumer insight. It is also systematically and analysed to combine intelligence from consumers, both real-time and lag data, and insights from a number of different sources. The first is in-store product advisors across the markets in which we serve. There is also journal reviews from thousands of medical and natural health journals that we scout and source information from on an ongoing basis. We also have live social listening across the markets in which we operate. And then there's brand communications and customer activation that we also are sourcing real-time data from. This information forms the foundation for all of the product development and communication that we develop here at Blackmores. The last core strength that I wanted to share with you in this example is winning in store. And when we talk about the store, we're talking both in a physical context as well as the digital store. Blackmores has a proven track record with market-leading execution across both physical and digital stores. We look through the winning in store framework across 4 key pillars: distribution, pricing, shelving, and merchandising. If I just take distribution as an example, Blackmores has the widest coverage across major retail channels in Australia and New Zealand, which includes pharmacy, grocery, online stores, allied health channel, as well as specialty, including a veterinary channel. Our pricing capabilities we've developed over the last 3 or 4 years relies upon a clear strategy around strategic revenue management, the management of our global pricing strategy across the 13 markets we serve, as well as ongoing promotional programs with our customers, ensuring that the path to purchase and purchase intent is driven by smart pricing in the markets, which is underpinned by our promotional strategy. Shelving, we have category management capabilities in place, both physical and online, and we're constantly developing ease of shopping solutions to increase shopper conversion and maximize category growth. And finally, merchandising. In-store activation delivers via insight-based activations in all channels. We're very proud of the fact that we are very consistent in terms of our in-store presence and delivering out the first moment of truth across all markets in a very consistent manner. Now, I'd like to take some time to take you through our 5 strategic pillars and our strategic plan. The transformation of Blackmores commenced in the year FY20. We're now in our second phase of our transformation plan that launched in FY21. The 5 pillars are shown here on the slide. The first is driving growth in targeted segments and markets. The second is simplifying our operations and reducing cost. The third is strengthening our supply chain. The fourth is igniting the Australian VDS opportunity. And the fifth is transforming digital commerce and operations. I'm going to take you through 3 of those core areas under our strategic plan. These core areas, I believe, we expect that will be reinforced by the KIRIN collaboration with Blackmores. So when we're looking at driving growth in targeted segments and markets, in particular in core markets within Southeast Asia, China, and then what we call our core growth engine segments, which are segments within the category which we see a high growth and where Blackmores has a right to win. I believe that the KIRIN LC Plasma ingredient technology will enable Blackmores to promote further premiumization and drive stronger equity and trust in the Blackmores brand in all of these markets and segments. In terms of simplifying our operations and reducing cost, we're underway in terms of our integration planning to discuss further opportunities with KIRIN to optimize our operations. And I've already seen shared value creation across both of our companies in this area. And the last one is strengthening our supply chain. KIRIN has a great history in supply chain and manufacturing. Blackmores and KIRIN together, I believe we can both utilize that experience to ensure that we continue to strengthen our supply chain, in particular in our core Asia markets. And for that, I'm very excited. I'll share a little bit more about the progress that we've been making on our integration planning later in the presentation. Now, just wanting to take a little bit of time to provide the group with an update and an overview on the vitamin and dietary supplement sector by market. Now, we see Blackmores operating in highly attractive VDS markets, and I'm showing 5 of those markets here on this slide. I just want to spend a little bit of time providing some context around the numbers here so that we understand both the size and the opportunity that exists in each of these 5 markets. So starting from the top, the total VDS market, you'll see there, this is Euromonitor data that is taken from the panel in FY22. You can see the size of each of those markets, starting with Australia at 2.7 billion Australian dollars, right through to the largest market, which is China, at just under 42 billion Australian dollars. China is the second largest VDS market in the world behind the United States. And you'll see in both Indonesia, Thailand, and Malaysia, the markets vary between 1.6 billion in size and almost 3 billion Australian dollars. The forecast growth, which is around the green box, shows the anticipated growth rates, constant annual average growth rates over the next 3 or 4 years for each of those markets, with Australia at 3.5%, China at 5.5%, and then the other markets in Southeast Asia, you can see that. When we talk about total verified markets, we prescribe to IQVIA or AC Nielsen data, which provides us with the coverage of the markets in which we serve. Because we are not serving every single channel in every single market, you'll see the difference between row 3 and row 1 in terms of the size of the market. So in Australia, our coverage is about 90% of the total Australian market. And you see there the verified market at 1.9 billion. Whereas in China, the verified market, as defined by SmartPath, is about 5 billion, which is largely cross-border e-commerce and some online and offline channels in mainland China. So you can see it's a fraction of the total China market. The other examples there, you will see, again, because we only get coverage on independent pharmacies and some modern trade channels in the verified market, you can see that our market share, which comes underneath that row, is a representation of our share in that verified market. The next row in terms of percent of contribution to sales is the net sales contribution for each of those markets. And then we show brand awareness on the bottom there. And you can see Australia has the highest brand awareness at 84%, Malaysia at 77%. China has the biggest opportunity in terms of brand awareness for Blackmores. So we see geographic diversification as a competitive advantage. This is underpinned by a strong focus on pricing and cost recovery in order to expand and maintain margins in an inflationary environment. In terms of our anticipated revenue growth out to 2027, Australia and New Zealand, we see somewhere between 3 to 5% constant annual average growth rate in terms of revenue. And our expectations there is that Blackmores would grow market share slightly ahead of the VDS market growth. In terms of Southeast Asia and the China region, you combine those Asia markets together, the constant average annual growth rate is somewhere between 7 to 9% over the next 3 or 4 years. Again, we expect to maintain or grow our market position in each of those markets in Asia. There are areas of investment that we're looking at, in particular in the China region, because of the awareness of Blackmores is relatively low. It will require increases in advertising and promotion in order to drive awareness of Blackmores in that very large and important market. The same is true in a couple of other markets in Southeast Asia, in Indonesia in particular. We will need to continue to invest in advertising and promotion to ensure that we drive brand awareness in those markets. I'd now like to take you through the FY23 financial results. I'm pleased to announce that we've delivered strong results despite economic headwinds that we've encountered in FY23. You'll see here, revenue was growing at plus 2.3%. Underlying EBIT grew at 13.9%. Underlying net profit after tax growing at 37%. Underlying EBIT margin 1 whole percentage point up to 9.8%. Gross margin was slightly down to 51.5%. The reason for the reduction in gross margin year over year is twofold. One was unfavorable country mix as we face some headwinds in the international markets. Those markets traditionally have very strong gross margin as a comparison to both China and Australia and New Zealand. So where we see growth in international, we always see very good growth in gross margin. The second area was increase in raw material cost increases, and in particular, fish oil, which we saw very, very high increases in commodity pricing over the last 12 months. In order for us to continue to expand our gross margin, there's really 3 areas that we need to focus in on. The first is ensuring that we continue to have a very healthy and strong pipeline of innovation, whereby gross margins for those products we're launching that are new to market are at or ahead of the company average. The second is ensuring that we have a strategic revenue management plan where we are driving positive mix at both the channel and the country level. And the third is around pricing. So very strong capabilities in both relative price movements as well as monitoring global price strategy. And that capability is very strong at Blackmores, and we continue to see good pricing execution across the business. All this, it goes without saying, is underpinned by continued discipline in cost management and ensuring that we have the right cost savings programs in place to drive value creation and shared value for Blackmores and for KIRIN. So finally, I would just like to give you an update on the progress we're making in terms of our 100-day plan and our integration with KIRIN. I'm very pleased to see that the teams have been working extremely well together as we look at these integration work streams across the 100-day plan. And you'll see here there is roughly 10 integration work streams. We have an enterprise program management office as well as an integration management office, which is working together across Blackmores and KIRIN. We meet on a fortnightly basis, and I am pleased to say that in terms of creating shared value, I can already see where we see opportunities for future value creation, as well as opportunities to strengthen both Blackmores and KIRIN Health Science capabilities in a number of different areas. I look forward to updating this group as we move forward on not only our integration plan, but also the opportunities for growth for Blackmores and KIRIN as we move forward. Thank you very much for your attention.